Hi, and welcome to the Stockscores Market Minutes for October 17th, 2011. Before I get started this week, I want to give you an overview of the Stockscores.com YouTube channel, just a couple of things that might help you get more out of the weekly online video. If you go to youtube.com/stockscores.com, and .com being spelled out as letters, you'll get the Stockscores channel. And once there, if you click on the subscribe link up at the top here, you can be notified of any time I upload a new video. That way you don't have to wait for emails or whatever to know whether the new Market Minutes video has been uploaded. So I encourage you to subscribe at youtube.com/stockscores.com. The other thing that I want to point out is the resolution button. If you want to watch the video in the highest resolution possible, click on the little number here in the bottom right and select 1080p. I always try to create the videos in full 1080p HD. That way when you watch the video and you click on the max size full screen button here in the bottom right, you'll be able to see all of the detail in the charts a lot easier. So as I said, this week we're going to go over a tool on Tradescores.com that gives you the ability to get a quick view of the overall market. I'll show you that in a moment. As well, we'll do our usual chart analysis, and I'll provide my outlook for the market in the days ahead. Alright, so let's get right into the Tradescores.com Chart Watch tool. If you go to www.tradescores.com and click on the Chart Watch tab right here, you do have to be logged in as a member, but it's free to do that. You can then use this really great tool to look at a whole bunch of charts. Now what I've done here is I've selected a group called the TSX Most Active, and you can see that in the right hand corner under Live Lists, and that brings up the most active stocks on the TSX. Now I could do that for the NASDAQ, the New York, whatever market you want. I then click on Gallery, and what that will do is give me 100 little thumbnail charts so I can get a real good idea of what the overall market is doing. I can see here a gold stock is moving higher. Generally speaking, we see most stocks are moving lower, but there's a few instances where we see stocks breaking their downward trend lines. For example, here Bombardier recently broke a downward trend line and is starting to build a rising bottom, so that would be a stock I'd want to keep an eye on. Now the beauty of this tool is that you can go through the entire market in just seconds. Here we can see Bankers Petroleum also breaking its downward trend line, and that was something I wrote about in the newsletter along with Bombardier for the same reason, having broken that downward trend line. Well, that's how I found these stocks for the newsletters. I just cycle through the charts. If I see something that looks promising to me, I click on it. Here's Canadian Oil Sands, broken a short-term downward trend line, although it still hasn't broken the long-term downward trend line. But as I said, you can go through 100 charts in probably 1 or 2 minutes simply by cycling through them. So give that tool a look. Again, you go to Tradescores.com and click on the Chart Watch tab up at the top right, and then select the list that you want to look at. You can, once you pull up the list, select Gallery, and you can see all these little mini charts very quickly. Alright, so let's get into the Chart Watch segment of the analysis, or at least the chart analysis. We'll jump back to Tradescores.com. What I've pulled up first is a chart of the S&P 500, and what I want to show you is how the market has essentially hit resistance right here. So I'll just draw a line here for you. We can see there we have that line of resistance, and that's probably why the overall market got stuck today. It has risen pretty sharply over the last 2 weeks or so. It hit resistance, and we had some selling pressure. Pretty reasonable given how things have gone over the last few weeks. Now, what is important is now how far the market pulls back from this. If it pulls back to something above the lows set 2 weeks ago, then it will have formed a rising bottom and will complete a head and shoulders bottoming pattern. Ultimately, of course, we need a breakout through that trend line, but that's, I think, what the market is probably going to do here. So look for a pullback in the short term, but then a rally back up into here, and ultimately I expect sometime before the end of the year that we'll get a breakout through that. Now, it could pull back for 2 days, it could pull back for 5 days, we don't know. What's important is that it forms that rising bottom. If instead the market moves to new lows, well, then the bears are still in control of stocks. The next chart that I have here is a chart of the TSX 60 ETF, and you can see that it too has hit resistance in a different way then the S&P 500, it is touching its downward trend line, and so we should expect it to get stuck. But again, if it can form a rising bottom on the right-hand side of this head and shoulders pattern, and we ultimately get a breakout there, well, that will be positive for stock. Now, what is interesting about today is that we saw a pretty good spike up in the VIX. You can see here with the ETF VXX. The VXX was up 10.4% today. The actual VIX was up even more. So that tells us that there was quite a bit of fear in the market, a lot of hedging of investment risk by big portfolio managers. If you look at the intraday chart, you can see that the VIX has broken, let me just use the right tool here, has broken its downward trend line. Did that today. I went long the VIX this morning and made a nice day trade out of that on the bounce back. I think the VIX may pull back in the very short term, like the next day or two, but as the market corrects, the VIX should come back up, as it has lost quite a bit of ground in recent history. Gold and oil are fairly interesting. Here's the chart of gold to start, and you can see that that upward trend line is still in place. Gold fell back a little bit, but certainly not as much as the overall market today, and its chart remains healthy, although we shouldn't underestimate the power that it will take to get through all of this overhead resistance on gold. So I think gold will slowly creep higher. It probably holds that long-term upward trend line. Oil has broken its downward trend line, or just barely so. You can see it's done that. So that's a positive. You know, the market's had a sell-off today. The VIX jumped up. But when you see things like gold and oil not breaking down, that tells me that there's not as much concern about what's going on in the world as there was, say, even 2 weeks ago. And that's why I think we will see a pullback, but we probably won't see a pullback to new lows. So my outlook then for US and Canadian stocks is pessimistic, but that's in a very short-term sense. We're talking within the next week. Longer term, I actually like stocks because of that comeback over the last 2 weeks. Gold, I remain optimistic, although very slightly optimistic, because I don't think it's going to make any great moves higher. Oil is neutral, but it has broken that downward trend line, and so that's a positive. We should see it start to turn around, but it's going to take some time. I would look at this pullback as an opportunity to accumulate stocks that started to turn around over the past 2 weeks. We saw a good bounce back in stocks. Now we're going to get some profit taking from that bounce back, but looking out a number of weeks, I expect that stocks in general will start to turn around, and we should use this pullback as an opportunity to buy. Well, that has been the Stockscores Market Minutes for October 17th. A reminder, if you would like to register for my free weekly newsletter, go to the address on screen, www.stockscores.com/newsletters.asp. Each week I provide a newsletter which has a market commentary, some stock picks, that sort of thing. Best of all, it's all free. Have a great week in the market and trade well.